Welcome to TradeTheMBI.com. This is John's report is for the 6th. And well, we've had some terrible internet issues, well, at least I have in Italy here, and so it's delayed my ability to even record this to get it out. Needless to say, though, nothing's changed from our general perception. We've been riding this steady rise of the red DOC along with the cyan having dipped below the green, and that has produced well, turnaround conditions here with the rising shakeout levels. And of course, we've been following what? The key levels. Okay, the 61%, 27.19. Above that, you want to be long. And then we know that we're going to hit some resistance as we get to the 48.50. Well, currently we hit 47.50 and it started to reject off of that. Currently, just before the open, it's trading a little bit below that, but you can guess that they're going to try and revisit that level. Of course, there's talk of trade wars, blah, blah, blah. You know, a lot of that's all nonsense at this particular point. Again, the yield curve becomes an issue, and that's starting to have a factor play. But, you know, trade war talk and those kinds of things makes it a little bit tougher for the Fed to do anything, and particularly with emerging markets. If they're not able to handle the increased growth in America and the rising rates, it's only going to draw money from those other countries. That is actually problematic, and the Fed will have to at some point take that into an account, because you can't have a solely U.S. growing market and not the rest of the world. Though it does have a trickle-down effect, it just takes too long for that to interact. And if the Fed gets overly concerned with hyperinflation, it really will cause a downdraft of significant proportions. So it's something to pay attention to. But when you have this kind of reverse spike, looked like we were going to get a spider for the bearish side, but the green maintained itself above. That's bullish. And the NQ has way outperformed. You can see it's already over the 76%. So makes for a far different cry. The rising euro also helping the indexes dramatically. It's a significant climb there. Crazy run here of TLT with treasuries. Bizarre for the inversion there. That makes no sense, but that's okay. And USO, you know, despite the Saudis' agreement to supposedly turn the spigots on, we still have quite a few positive extremes to fill back in here. They will. So that is a benefit, at least in knowing that at some point you're coming all the way back down to fill this whole pop-up. But the reality is it's a perfect time. You're squeezing people who are traveling and doing summer activities, and that's always an opportunity for them to take advantage of the opposite side of the trade. This is no different than with all the people clamoring for short, the market rises. So when they stop thinking the market's going to go down and they capitulate is when the market will go down, because at that point they won't be fighting it and they won't be the new longs buying at the higher and higher price. The resurgence of gold, it's coming, particularly because there's no way you'll be able to conceal inflation, and that is going to be the safe haven. Of course, yes, you can go to your cryptocurrencies, but off the lows, but still having difficulty in that transition, because unlike physical gold, what can you do with your Bitcoin at this particular point? Not a whole lot. You can see in the pre-market, though, again, beautiful with the dots. So we get with the positive extreme right at this high. Secondary one comes in here. You wouldn't want to add there. You would want to add at the next bar high. And at that particular point, you then get the blue dot, which comes right after it, and then the apocalyptic collapse, which is not that big a deal because you kind of expected that you're going to get a fill back all the way down. Well, it was the low of this bar right here, and then you ended up with a carry through that just took back some previous levels that had already existed, nothing special per se. Even this most recent pop did not produce positive extremes. To give you yellow dots, a little bit of a series, and yes, it dipped to the 50. But as long as it's holding that 50%, fairly strong in there. We can see from the other day, gold already at the 100%. Nothing you can do about that. It's you're already there. There's no bias that's going to give you anything special from there. We do, well, let's see if we get that. Let me back it up here, because we have this positive extreme that began the run. You know, I like the secondary level. In this particular case, that's 24 range. for a retrace, and we came down to 25 right here, well within the 80%. The first bar, however, which is that breakout bar, is a little bit more problematic to always get the retraces to them at the 2275, but that does become a looming target that has to be paid attention to in a declining setup. We don't have that at this particular point, so don't jump the shark with just saying, oh, any short that comes in is going to get there, because that one's a little bit further back from an extreme standpoint. It's going to take a lot more of a downdraft to get it filled. What we ended up with was here, going back, I wanted to cover this one a little bit because it's an interesting point. So we had the white candle that produced these darker blue ones. My internet's driving me nuts here, how slow it is. We got the white candle. So our expectation is that that close on any pop is going to get filled back in. Well, sure enough, it happens immediately. Now the blue candle, we typically expect that to be more bullish, but oftentimes you do get a little bit of a downdraft on those before they start coming. Well, it turned to gold, which means that we expect a move back down towards the lows. Well, once we got the move back down, and fine, you had this little teeny wick, but you're well within 80% of the low at the bottom of this one from 1250, and the low was right there at 1075. So it's there, it's close enough. So it becomes problematic because you don't have an expectation at this particular point. You can play weakness as it shows, but once you start turning to the positive shakeout, and then boom, here it was, we popped above the 50%. Now, usually for me, when I see that kind of turn from gold, flipping above the 50, I would cover any short literally instantly at that 50%. And when it starts to make its move, because my expectation then is to the 100, I know that when I get more of these at the proper level, then I can attack it. I know my retrace values. See, this becomes very important at this particular point. So at this spot, I'm looking for the low to have to retrace to 27.21 and a quarter. Fine, but I'm also expecting to move to the 100%, which is up at 35. So you got best of both worlds in this particular case. So you can wait for your 35 knowing that you've got 21. It does do exactly that. And that's what becomes very clean about it. And so these are the basics of what I like to look for. When you start to see these green dots here coming below, usually it's because you're getting extremes that are not showing dip below the red line, meaning oversold, which is why they tend to hold those Fibonacci supports. And so when you see them at key Fibonacci's, they tend to have a little bit more value. What you look for then is your DOC saying, okay, do I have any significant background support behind it that's going to give it a reason to support? In this particular case right now, we're looking at the start of action where cyan breaking above, so that should pose some weakness. It's going to be critical right at that 50%, and a break below that will start to turn that red, and be exciting action from there. So I'll put up any charts as I can depending on my internet, and we'll go from there. Trade well.